I'm consumer advocate Tom Martino with exciting news about a safe, conservative investment appropriate for just about anyone. If you're just starting out, or perhaps a sophisticated investor who wants to diversify their portfolio. With me today is Joseph Quijano, a certified financial planner, national financial educator, and a published author on this very topic of becoming your own banker. Joe, if you had to sum up this financial strategy, how would you do it?
Well, Tom, it's a real simple program with a very simple formula that offers a 4% guaranteed and tax-free rate of return. Totally liquid. No penalties to get your money out.
So it's not a qualified retirement plan.
It's the opposite. It's like night and day. A qualified retirement plan, as we all know, you can't get your money out unless you pay a penalty and taxes. And to become the banker is totally liquid with no penalties and totally tax-free.
This all surrounds life insurance. The government allows us to overfund life insurance to accumulate cash value tax-free. It's one of the last great tax shelters for retirement.
And you'll get paychecks for the rest of your life, tax-free.
Joseph Quijano and his son are not your typical life insurance salesman. In fact, they downplay the insurance part of their business.
You put money into this life insurance policy, not because you're buying life insurance. You're doing it to create wealth.
And the amount of wealth is up to you. You can pay premiums as little as $200 a month or deposit big sums of cash. It's totally flexible. But remember, the goal is to get the smallest amount of insurance with the biggest premiums so you can build big cash values tax-free. So through your life, you build up this account. And can you use it for college?
Oh, absolutely. For anything you like. College, retirement, a new business, doing a mortgage on a home, or getting out of debt, Tom. Getting out of debt in 9 years or less, including your mortgage, without having to refinance your home.
So you put the money in this account and pay off all your high interest debt.
Absolutely.
And you pay yourself that high interest.
What you were paying those credit companies or those bank loans.
The Quijanos call their life insurance investment strategy Become the Banker, because you can borrow from your policy for cars, college, or anything.
You are going to be making the interest that the bank would have made off of you.
So by paying interest to yourself, you're actually putting that money away.
Absolutely, for your own retirement. Isn't that beautiful?
Are you getting all of this? If you become the banker, you can grow guaranteed wealth tax-free. Forget the stock market. Borrow from yourself. Pay yourself interest instead of banks, which shelters even more of your money. And finally, get tax-free retirement paychecks for life.
It's actually based on the design of the policy. And when you see a life insurance policy from any other company that doesn't know how to design the policies well enough for the Become the Banker strategy, they will give you a huge death benefit and very little cash value. This is why people don't like life insurance, Tom. They say, I have to die for the policy to pay. Or some people may say, I'm worth more dead than I'm alive.
But the purpose of this is just to get enough life insurance to establish that cash account.
Absolutely, to just basically the minimum life insurance coverage to keep the policy tax-free under the definition of life insurance. So when people really understand that, they get the least amount of life insurance and the most amount of cash. So people can use their money day one and they don't have to die for the policy to pay.
And then in retirement, they borrow from it?
They borrow to keep, because any loan is tax-free. So they borrow the money and they basically get paychecks for life, but they don't have to repay them. They don't have to repay that loan because the death benefit will pay that loan back.
So you get a life insurance policy, you overfund it, it grows tax-free, you use the money for yourself instead of credit cards and bank loans, you build up this giant bundle and then borrow from it in retirement for the rest of your life.
Exactly.
Well, that sounds just a little too good to be true.
Yeah, but it's not though. I mean, the wealthy have been doing it for the last 200 years. You know, if you take, for example, the late President Gerald Ford, he bought all the Vail property that he owned and here in Colorado through his life insurance policy. Senator John McCain has used the Become the Banker strategy to finance his presidential campaign. And even the ex-chairman of the Federal Reserve, Ben Bernanke, who controls the money supply of this country, uses the Become the Banker strategy.
Are you curious? Have you seen enough to know you at least want to explore this investment opportunity? Then by all means visit becomethebanker.org. There you will find a link on the main menu to register. Simply fill out the form and choose a date that best fits your schedule. Robert did it and loved it.
Sounded great, and I finally got up the courage to go and listen to what Joe had to say, and it was just an unbelievable plan of how it works, especially the tax-free portion of it.
It's the only vehicle that we know that is totally tax-free.
It's one of the last great tax shelters for retirement.
And when you want income for the rest of your life, all you do is turn the switch. And you'll get paychecks for the rest of your life, tax-free.
You just draw the money out.
You draw the money out.
Then who pays off that loan in the end?
The death benefit.
That's it.
That's it.
You may not be in a position to get to a Denver area seminar. Perhaps you're watching this from another part of Colorado or even another state. If that's the case, you can call to find out about a webinar where you can look and listen on your home computer, laptop, or cell phone from the comfort of your home or office. And of course, a seminar is not required to get started. You can always call Joe directly for a one-on-one session at 303-779-6600.
So by paying interest to yourself, you're actually putting that money away.
Absolutely. For your own retirement. Isn't that beautiful?
Become the Banker is a safe, reliable investment opportunity open to anyone for as little as $200 a month. But you must take the first step. For more information, contact Joe and his team today. When it comes to borrowing money, that money is still earning interest in your account. Is that right?
That is right, Tom. We have a policy that is full of money, basically, and you're borrowing against that policy. You're not borrowing from it.
So the insurance company gives you the money. Your money remains in place, earning 5%.
Absolutely.
Then what does the insurance company charge for that loan?
5% on the borrowed money.
So you're basically a wash.
Well, not really, because see, you're making 5% on the entire amount of your policy. You're paying only 5% on what you borrowed. So if you had $20,000 in your policy and you wanted to borrow 10 from the life insurance company, you would pay the life insurance company 5%. But you would be earning in your policy 5% on the entire $20,000. So basically, you're making money on borrowed money.
And when you pay yourself back then, you would purposely pay more than the 5% to get more money into the account.
Absolutely. Think about it. I mean, if you have a credit card, a Visa, that they're charging you
12, 14,
or
16%.
50%, why not pay yourself that? The first 5% will go to the company, and the additional 10 will go where?
Into your policy.
Exactly.
So this is a sneaky way to shelter even more money.
Absolutely, and it's totally approved by the government.
How do you get started in this plan?
Just give us a call, basically, and you establish a life insurance policy with us with the proper design. That is the key. See, everybody sells life insurance, Tom,
Yeah.
but they don't know how to design the policy properly to become a bank. So you have to go to somebody that is absolutely in tune with a Become the Banker strategy to design the policy properly.
Because the purpose is not to be overloaded with life insurance.
Exactly. The purpose is to build a cash, a pool of money that is tax-free.
Now, can you increase the money you put in over the years or decrease it if cash flow becomes tight? Or if you want to put in more, can you put in more some years?
Yes, it's totally flexible.
So the government allows this and the tax code allows this. So why do people not do it?
They don't know. And secondly, that's number one. Secondly, most of the financial advisors and insurance people do not want to talk about this because their commissions are based on the death benefit. So they much rather sell a traditional policy with a huge death benefit because they're going to make more money. This is what I call an agent-driven policy. The Become the Banker policy, on the other hand, has a minimum death benefit, so an agent will make less commissions, but the client makes all the money. That's what I call a consumer-driven policy, and I believe this is what you like about it.
Yeah, I love it. Now, you say you can invest as little as $200 a month.
Right.
But what if I have savings and the money's just sitting in the bank? Can I make a lump sum payment to let that grow?
A lot of people do that, Tom. You know, right now the banks, think about it, the banks are paying us less than 1%.
Right.
And they're sending you a 1099 at the end of the year, right?
Right.
So you're making less than 1/4%.
With taxes, you're right.
Yeah, so basically, most people can move the sum of money, deposit the money as a lump sum, and continue to make monthly contributions or yearly contributions into the plan. It's a phenomenal way to kickstart the policy.
Now, when you have this policy, if you skip a payment, would it lapse?
No, it would not lapse. This is totally different because these policies are built with a lot of cash. So if you skip a payment, basically the company will take it from your cash to keep the policy going.
So it's safe, it's conservative, but what about the stock market? What about people saying, I'd rather invest in the stock market?
Well, you know, the stock market is gambling, as we all know.
Yeah, kind of.
It goes up and down, right?
Right.
Up and down. Now, over the last 20 years, the market has returned less than 3%. This is with fees and the volatility of the market. If you remember 2008, 2011, we had market crashes.
Right.
They're predicting one this year. I mean, we have no control of the market. Somebody could go wrong with North Korea and the market will go down.
But aren't these proceeds that you put into the insurance policy, aren't they invested in the stock market?
No. See, this is something that the government will not allow a life insurance company to do, to invest their assets in the stock market. Because you see, they couldn't go to the insurance commissioner and say, I'm sorry, Mr. Commissioner, we can't pay the death claim because we lost money in the stock market. They can't do that.
So,
you see?
So this money is not invested in the volatile stock market?
No, not at all. Most of the companies, 70% of their asset is invested in long-term bonds, investment-grade bonds, which are totally different than stocks, right?
Yes.
And then part of their asset base also is invested in commercial real estate mortgages, not home, but I'm talking about shopping centers, commercial real estate. The balance is actually in cash and government securities.
Okay, you say 4% is guaranteed.
Yes.
But it's only as good as the company. So how guaranteed is that 4%?
It is totally guaranteed by the company. All the companies that we deal with are A-rated companies. So they're strong financially. They have been in business for over 100 years. And they have never missed paying a dividend, which is actually sharing the profits of the company with the policyholders.
So wait, so you get more than the 4% if you get a dividend?
Yes. We deal with mutual companies. Mutual companies are like credit unions, Tom. Okay?
Yes.
There's no stockholders. There's no shareholders. A credit union will give you a dividend, which is the profits that they're making, because you are a client.
Part owner.
A part owner,
Yes.
right? So it is with a mutual company. A mutual company has no owners except the policy owners. So that means when a mutual company makes a profit, they call it a dividend. And they will share those dividends with the policy owners.
What dividend would I get if I became the banker in your program?
Right now, they're 1%.
So it's
1%.
4 plus 1, 5%.
Right. Yeah, but that's not the case. It could go up or it could go down. Those dividends are not guaranteed. But the companies that we deal with have never missed paying a dividend, listen to this, for over 100 years. Now, when I began working for this company, they were paying 12% on dividends 20 years ago.
Wow.
Now, this is when you could go to the bank. You could go to the bank 20 years ago and get a 8% or 9% savings account. Remember those years?
Yes.
Okay.
Yes.
Today, the banks are what? Paying us less than 1%?
Less than 1%.
So the dividends reflect the economy. just like a bank. So 20 years ago, people that had a Become the Banker policy were getting 16%
Wow.
on their life insurance policy. Taxable or tax-free, Tom? Totally tax-free. Today, they're getting 4% plus the 1% dividend.
Tax-free.
Tax-free. So to equal the return, people have to be making
Like
about
10%.
10% that after paying taxes, they're going to be netting the 5%.
Not to mention bank fees.
That's right. Or the risk of losing your money.
Right. But what about the cost of insurance? Certainly, the life insurance is not free.
Absolutely.
So if
not.
I put in money today, don't I have to wait until the insurance is paid for? How does that work?
No. See, if you put in money today, almost 80% of your money that you put in, you can actually borrow. Day
Right
one.
away.
Right away. In fact, let me tell you something, Tom. I had one of your listeners.
Yes.
That lives in Pagosa Springs.
Yes.
And he wanted to put $130,000 into a policy. See, there's no limit.
Right.
Okay. So he put $65,000 year one and $65,000 year two. Okay.
Okay.
So the first year, when he put the $65,000, he was able to borrow $57,000 day one. How good is that?
So you end up borrowing from yourself instead of banks and credit
Right.
cards. That's why we call it Become the Banker.
Exactly. And this is something that why he wanted to borrow it. He wants to buy a plane.
Wow. So you can buy a boat, you can buy a plane, you can go on vacation,
pay for
and then you
college.
simply pay yourself back.
Instead of the bank, instead of the credit card companies.
And that interest is even more money that you're giving yourself to grow again.
For retirement.
So by borrowing from yourself, you're benefiting your retirement.
Absolutely. Because you're recapturing what you would have lost to the banks and credit card companies.
Okay, so let's talk about starting. You have seminars. What happens at these seminars? Now, they don't have to go to a seminar.
No, they don't.
They can call you directly.
That is right.
And the number is on the screen. But if they want to go to a seminar and find out more, what are they all about?
We actually hold 2 seminars a month.
Okay.
Every month. One up north and one in the south. And basically they go from 6:30 to 8 o'clock at night.
And you go over everything.
Everything. And absolutely we don't sell anything. So people can leave their wallet or their purse at home. We don't sell anything. We don't sell books.
It's
or
all
tapes.
information.
It's all education. And basically they last about an hour and a half. And when they leave, people have a different viewpoint about money. They will learn how money works in today's economy.
And how do they find out about the seminars?
They can go to becomethebanker.org/register. By the way, they're free.
And they'll find out where the seminars are.
Yes.
And they can sign up right there.
Absolutely.
Are you curious? Have you seen enough to know you at least want to explore this investment opportunity? Then by all means visit becomethebanker.org. There you will find a link on the main menu to register. Simply fill out the form and choose a date that best fits your schedule. Robert did it and loved it.
Sounded great, and I finally got up the courage to go and listen to what Joe had to say, and it was just an unbelievable plan of how it works, especially the tax-free portion of it.
It's the only vehicle that we know that is totally tax-free.
It's one of the last great tax shelters for retirement.
And when you want income for the rest of your life, all you do is turn the switch. And you'll get paychecks for the rest of your life, tax-free.
You just draw the money out.
You draw the money out.
Then who pays off that loan in the end?
The death benefit.
That's it.
That's it.
You may not be in a position to get to a Denver area seminar. Perhaps you're watching this from another part of Colorado or even another state. If that's the case, you can call to find out about a webinar where you can look and listen on your home computer, laptop, or cell phone from the comfort of your home or office. And of course, a seminar is not required to get started. You can always call Joe directly for a one-on-one session at 303-779-6600.
So by paying interest to yourself, you're actually putting that money away.
Absolutely, for your own retirement. Isn't that beautiful?
Become the Banker is a safe, reliable investment opportunity open to anyone for as little as $200 a month. But you must take the first step. For more information, contact Joe and his team today.
Okay, if you're just joining us, I'm with Joe Quijano, a certified financial planner and a national educator on finances. He also is a published author on this method called Become the Banker. And Joe, if you had to sum up this investment strategy, you would say it's overfunding life insurance in order to let it grow tax-free. And then you borrow from yourself, pay yourself back with interest to let it grow even more.
That is right.
And then eventually you borrow from it for retirement as a paycheck.
That is right, for the rest of your life.
And you don't pay it back because the death benefit will pay it back.
Exactly.
Wow, that is a great plan. It's not qualified, so they don't limit you.
Right.
No matter how much you make or how little you make, you can do it.
That is right. You know, Tom, a lot of people love the Roth IRAs.
Yes.
Now, Senator Roth was the one that actually put that together.
Right.
But he wanted to have a Roth that had no limits, that had a death benefit, and that had no penalties.
Sounds like this.
He didn't get that, did he?
No.
But this is a super Roth. This is a Roth in steroids.
It really is.
It truly is, yeah.
So, what are some of the examples that you have of people who retired and how much did they have?
Just depends on how much money they contributed. The more people contribute into their plan, the bigger their pool of money and the bigger the retirement paycheck that they will get.
So
just like anything else.
Have you had people getting $10,000 a month?
Oh, absolutely. I mean, that's not even 10,000 is it's okay. I mean, that's anybody can.
That's
achieve
not
that.
even on the high end.
No, that's not a high end. We have people that actually have between $35,000 to $100,000 a year that they can start drawing out.
Wow.
Yeah.
Okay, if people start out small, can they increase the premium later on in life?
Yes, they can. They can either increase it within their own initial policy, or they can buy additional policies. For example, I have 9.
9 policies.
9 policies. I have 2 on my own self, I have 1 on my wife, and 1 on each one of my children. See, you can put this insurance on your children. See, you got to think of it like a bank. What happens when a bank becomes successful? What do they open?
Branches.
Branches. Well, I have 9 branches. So I can borrow from all my 9 policies. Think about it.
And so you can take a policy on anyone?
Not on anyone. You have to have an insurable interest, either by bloodline or by business.
Like a key man
Like
in your
a key
business?
man in your business, or a spouse, or a child, or a grandchild, anybody that has a bloodline. You have to have an insurable interest.
And so you have 9 policies.
9 policies.
And those policies are all independent, and you can borrow from each one
Absolutely.
or contribute to each one.
Absolutely, and I do. Absolutely.
Do you help people plan it to come up with a plan on how much to put in and how much to take out?
That's exactly what we do after the seminars. We meet with people individually. We want to find out where they are financially now, and then we want to see their goals in the future, and then we'll try to kind of manage the Become the Banker account to fit them individually.
Do I have to qualify for a car loan? Let's say I want to take $10,000 out of my policy to buy a car. What approval process is there?
Would you check your own credit?
Not really.
Okay.
So how do I get the money?
You control. It's real simple. All you do is sign one form. Just one form, and the company will say, how soon do you want the money?
And it gets wired to my account?
Absolutely. Or if you want it overnight, you pay the FedEx fee. But I mean, if you want this wired to your checking account, they'll do it for nothing.
Now, this is the interesting thing. When you borrow from yourself, that money is still earning interest in your account.
That is right. Because see, the money that you borrow doesn't come from your policy, Tom.
It comes from the insurance
It
company.
comes from the insurance company.
And your policy is the security.
That is right. So basically, if you had $20,000 in your life insurance policy, that $20,000 is earning 4% plus the 1% dividend. That's compounding, right?
Yes.
If you want to borrow $10,000, you borrow against your policy, not from your policy. You take the money from the life insurance company, right? They'll give you a check for $10,000. Are they going to do it for free?
No.
No, they're going to charge you interest. But this is the key. They're going to charge you 4.76%. Call it 5%. But it's simple interest. It's not compounding interest.
So you're earning 4% here.
You're earning 5.
You're earning 5% with your dividend.
Right.
And you're paying 5.
Right, but the key is you're earning 5% on the entire 20.
Right.
And you're only paying 5% on the 10 that you borrow.
So really, the loan is not costing you.
No, you're making money on borrowed money.
Wow. And so when you pay yourself back, you pay yourself more than that 5% on purpose.
You got it. Because see, anything extra would go where?
It would go to the credit card or to the bank.
But I mean, if you pay it to yourself, it's
It
gonna
goes
go
into
to
your account.
policies,
Right.
Making the account even grow faster.
So this is why you want to borrow from yourself. There's no need to have a credit card when you have this cash account.
That is right.
Okay, and then eventually you use it to live on in your later years. And you can decide when that is, I guess. You don't have to wait till 65.
No, you can do it at any age. At any age. But here's the key, Tom, okay? We want people to understand that this is a totally tax-free account.
Yes.
Okay, if they have a 401k right now, and let's assume that they have a 401k and they have $1 million in that 401k, and they want to take 10% a year from the 401k.
Right.
That's $100,000 a year, right?
Yes.
They are going to lose 30% to taxes.
That's right.
So that means that they're going to net only 70,000 of the 100,000. So the Become the Banker account could be a beautiful complement for people like that because they can take maybe $30,000 tax-free to make up the difference of what they're losing from the 401k.
Interesting. So if we wanted to get started in this today, we would have to have some kind of idea of how much we want to retire on, or can that change over time?
That can change. We don't want to complicate things. We want people to just tell us how much money they would feel comfortable contributing into the plan today. And then we can figure the rest of it out. People don't have to come to seminars. People can actually have a webinar. A lot of people, you have a huge following. And I can tell you that we have people from Texas, New Mexico, Pagosa Springs that I was telling you, all over the place, Idaho, and when we do webinars with them. So they can learn in the comfort of their home. They don't have to leave their home.
This is Become the Banker, and to find out more, you can go to becomethebanker.org. That's becomethebanker.org. On there, you will find a way to register for the seminars. And of course, you can always call the number below to get your free direct consultation on how Become the Banker can work for you.